So if you want to know whether a $1.75 trillion space company is going public this summer, you could wait for Wall Street analysts to issue some carefully worded report. Or, I mean, you could look at where thousands of internet users are currently risking their own rent money.
Right, and the difference between those two methods is, well, it's really the defining financial shift of our time.
Mm-hmm.
One relies on a few people in high-rise offices making educated guesses, and the other...
The other relies on a massive, decentralized swarm of individuals who actually have skin in the game.
Exactly. People with actual money on the line.
Yeah, and we are diving deep into that swarm today. Welcome to the Deep Dive. We have a genuinely fascinating stack of prediction market data for today, Tuesday, May 12, 2026.
It really is a packed day.
It is. And the central theme emerging from all our sources is that these prediction markets have officially entered their institutional era. They are no longer just a niche internet hobby for crypto traders.
No, not at all. We are talking about severe legal friction in Washington, massive corporate wagers, shifting political landscapes, the whole 9 yards.
Okay, let's unpack this. Because to understand what that institutional era means for you, the listener, we really have to look at the raw data. Today's docket is dense. We are tracking a critical turnaround attempt by Under Armour, an absolutely staggering valuation for SpaceX, Bitcoin's high-speed race to $100K.
And a literal congressional crackdown on trading.
Yes, plus Colombia's upcoming elections and the courtroom drama of OpenAI versus Elon Musk.
Right, so we should probably start right at the top with the corporate pulse.
Yeah, let's start there because the #1 trending topic on Polymarket this morning is happening in literally just a few hours. Under Armour's Q4 2026 earnings call is set for 8:30 a.m. Eastern Time today.
And to give some context, the stock is currently hovering near its 52-week low of just $6.05.
It's rough.
It's really rough. And the traditional Wall Street consensus estimate for their earnings per share, or EPS, is -3 cents. So traditional analysts are firmly expecting a loss for the quarter. But, the prediction market is telling a completely different story here.
Oh, entirely. Traders are currently signing a 61.5% probability that Under Armour will actually beat that consensus estimate.
Wow.
Yeah. But before we go further, let's explain how that percentage is actually calculated, because it's really the mechanical foundation of everything we're talking about today.
Right. So what's fascinating here is that it all comes down to binary pricing. When you see a contract that says, will Under Armour beat earnings, the market prices shares between $0 and $1.
Okay.
If you buy a yes share and the company beats earnings, that share pays out exactly $1. If they miss, it pays out 0. So when we say there's a 61.5% probability, what we are actually saying is that the market is willing to pay 61.5 cents for that yes share right now.
Ah, I see. So the price itself is the probability.
Exactly. They are one and the same.
Right. And traders are just piling into those 61-cent shares this morning, turning this specific contract into a massive liquidity magnet. I mean, they're hoping for a repeat of last quarter, where Under Armour pulled off that surprise 9-cent EPS beat.
Yeah, they really want that repeat.
But I want to analyze how this happens. Because Under Armour is, it's like a massive cargo ship trying to turn around in a really tight canal. Wall Street is looking at the ship's massive size from a satellite image and saying, well, a turnaround is mathematically impossible this quarter.
Right, it's too clunky.
Exactly. But the prediction market is somehow looking at the water currents beneath the surface. How does a crowd of internet traders know the internal corporate accounting of a struggling apparel company better than the professionals?
Well, it's driven by a concept called asymmetric local knowledge. The traditional Wall Street analyst relies on quarterly reports, official supply chain data, corporate guidance.
Which is all heavily filtered and delayed.
Exactly. It takes time to compile. But the crowd in a highly liquid prediction market is fundamentally different. That crowd includes, say, a warehouse worker in Ohio noticing that inventory is clearing out faster than expected.
Oh, what?
Or it includes retail managers at outlet malls seeing an unexpected spike in foot traffic over the weekend.
And prediction markets allow that warehouse worker to instantly monetize their observation.
Yes, precisely. They buy the yes shares at 40 cents. Pushing the price up to 50 cents, and eventually up to that 61.5-cent mark we see today. They bypass the whole corporate hierarchy that usually delays data from reaching Wall Street.
Right.
When you aggregate thousands of those micro-observations and you force people to back their opinions with money, it produces a truth serum that top-down models simply cannot replicate.
That makes total sense.
Yeah.
And that micro turnaround we're seeing priced into Under Armour is actually a perfect counterpoint to the absolute macro Goliath on our list today.
Oh, you mean SpaceX?
Yes. Let's look at SpaceX. Over on Kalshi, the markets are showing a 71% high conviction bet that SpaceX will announce its IPO before July 1st.
Which is huge. Traders are aggressively bracing for the S-1 prospectus to drop in the next 10 days.
And just as a refresher, an S-1 is the legally required document a company files with the SEC before it goes public, correct?
Yeah, it's essentially the financial anatomy of a company. And for a company like SpaceX, which has operated with notorious opacity regarding its internal financials, I mean, nobody really knows what's going on under the hood, the S-1 is a highly anticipated reveal.
To put it mildly, the target valuation being discussed on these markets is $1.75 trillion. Trillion with a T.
It's staggering.
It really is. A $1.75 trillion valuation isn't just an IPO, it's a gravitational event. An offering that massive would suck capital out of every other tech stock on the market. Institutional investors would literally have to liquidate other holdings just to make room in their portfolios for a piece of SpaceX.
Right, which is exactly why traders are watching this July 1st date so closely. And it highlights why you, as an everyday observer, should care about these probabilities.
Yeah, why does this matter to the average person?
Well, whether you actively trade or just follow the broader economy, these markets serve as your early warning radar. They are signaling structural market shifts before the official documents drop and before the financial press even writes their summaries.
You can see the wave coming before it hits the shore.
Exactly.
But a $1.75 trillion market signal is, it's simply too loud for Washington to ignore. When an alternative financial system starts front-running traditional Wall Street and setting the narrative, the traditional rulemakers get incredibly nervous. Which brings us to the friction of this new institutional era.
Yeah, the regulatory hammer is coming down today, May 12th. The U.S. House of Representatives is returning from recess specifically to vote on a resolution that outright bans members of Congress and their staff from participating in prediction markets.
Right. And this follows the Senate's unanimous rule change last month. Both of these legislative moves were heavily catalyzed by that scandal earlier this year.
Oh, the U.S. soldier scandal.
Yeah, the U.S. soldier who executed a $400,000 insider trading play on a geopolitical prediction platform.
It was a massive wake-up call for regulators.
Here's where it gets really interesting, though. Let's pause and really look at this congressional ban. Banning lawmakers from these markets is basically like banning referees from betting on the game they are officiating.
That's a great way to put it.
Right. I mean, a congressional staffer could draft a regulatory bill that impacts the energy sector, and before the bill is even made public, they could go buy no shares on an energy company's earnings contract.
The conflict of interest is just blatant. When individuals possess the power to influence the outcome of the event being predicted, or they possess non-public knowledge of that outcome, their participation just completely warps the market mechanics.
But wait. This introduces a massive flaw in the premise of everything we are discussing today, doesn't it?
How?
If these markets are this vulnerable to insider knowledge, like that soldier who extracted 400 grand because he had early access to military movements, doesn't that completely undermine the whole wisdom of the crowd concept? Like if the market is simply tracking who has the best illegal leaks, we aren't measuring collective wisdom. We're just tracking corruption.
That's a very fair point. And you are identifying the critical vulnerability of any low liquidity market.
Okay.
If a prediction contract only has, say, $50,000 in total volume, a single insider with early information can drop $20,000, completely tilt the odds, and extract a fortune. They aren't predicting the future. They are just front-running reality.
Sure, but how do you fix that? You can't just mandate massive liquidity on every niche topic. If a market is asking who will win a small-town mayoral race or predicting some highly specific legislative vote, the volume will naturally be low. Aren't smaller markets doomed to just be insider playgrounds?
Smaller markets will always carry that specific risk profile, yeah. Which is why market makers have to set strict trading limits on niche topics. But to see how prediction markets naturally defend themselves against manipulation, we have to look at an asset that cannot be controlled by a single insider or subpoenaed by a government.
Which is?
Bitcoin. If you look at the Kalshi Crypto Hub data for today, the volume for the market asking how high will Bitcoin get this year has crossed $23 million.
$23 million of capital committed.
Yes. And with that kind of volume, the smart money is pricing a 49% probability that Bitcoin crosses $99,999.99 before the end of the year.
So it's effectively a coin flip for a $100,000 Bitcoin right now.
Exactly. And we also have the high-velocity short-term data.
Hmm.
For the immediate month of May, the dominant bet is on Bitcoin hitting $85,000. That sits at a 51% probability today, heavily influenced by Bitcoin trading consistently above the $81,000 mark this morning.
Right, right. Let's apply this to the insider trading problem, though. If a market is a puddle, an insider tossing a heavy rock into it creates a tidal wave that disrupts everything.
Sure.
But if the market is an ocean line, like a $23 million Bitcoin contract, the insider's rock just disappears beneath the surface?
If we connect this to the bigger picture, that is the exact mechanical reality. When liquidity reaches the tens of millions, the collective capital of the crowd just overwhelms any single actor.
They just get drowned out.
Exactly. A rogue politician or a military insider cannot manipulate a $23 million market without taking on an absurd, ruinous amount of financial risk themselves. The sheer volume acts as an immune system, diluting the power of the insider and creating a genuinely robust forecasting tool.
That's a fascinating way to look at it. Okay, so we have looked at how these markets handle corporate accounting, massive IPO valuations, and decentralized digital assets. Predicting math and revenue is one thing. But I want to shift gears and look at how these platforms handle the messy, highly subjective, and honestly, entirely unpredictable nature of human behavior. Let's talk about courtrooms.
Human behavior, particularly within the confines of the legal system, is really the ultimate stress test for the prediction market model.
It really is. The sources have fascinating data on the liability phase of the OpenAI versus Elon Musk trial. After a highly volatile first week of testimony, Musk's probability of winning the case has settled into a 39% to 53% range on Kalshi.
Right.
But how do traders actually translate complex, nuanced legal rulings into a hard percentage? Like, how does that even work?
They do it through intense specialization. The people trading heavily on legal outcomes are rarely casual participants. They're often lawyers, paralegals, and industry analysts who parse docket updates in real time.
Oh, so they aren't just guessing.
No, not at all. They effectively form a decentralized, crowdsourced legal analysis firm. They read the transcripts of the daily testimony, evaluate the judge's temperament, and assign a financial value to every procedural ruling.
And the reason we see a range like that, 39 to 53%, instead of a single static number, is because of the bid-ask spread on the order books. Right?
Yes. In volatile, human-driven events where a single witness statement can alter the entire trajectory of the case, the market makers and traders are constantly repositioning, creating that wide probability band.
That makes sense.
And a critical signal actually did emerge from that decentralized legal analysis recently. Judge Yvonne Gonzalez-Rogers dismissed several of the fraud-related counts in the case.
Which significantly narrows the battlefield.
Exactly. It focuses the entire legal fight squarely on the nonprofit mission claims. This is no longer just a breach of contract dispute between two billionaires. The prediction market is pricing this as a referendum on the future architecture of artificial intelligence.
It's open source development versus corporate closed model AI.
Right, because if Musk wins on the nonprofit mission claims, it could force a radical industry-wide restructuring of how AI companies are legally permitted to operate under their founding charters. The traders are calculating the systemic risk of that exact outcome.
Wow. But there is another arena of human behavior where the markets are showing much more conviction than the courtroom, and that is the voting booth.
Ah, yes.
We need to look at the upcoming late May Colombia presidential election.
The geopolitical markets are showing intense volume there today.
They really are. According to the data, the right-wing populist candidate, Abelardo de la Espriella, has officially overtaken the leftist frontrunner on the Kalshi prediction markets. He has reached a 42% probability of winning the presidency.
Right.
And to be clear, we are simply reporting the mechanical divergence in the data here, not endorsing any political ideology. So what does this all mean? We are looking at a classic market versus polls battle. Traditional polling shows a very tight race, leaning toward the frontrunner. Yet, thousands of traders are putting capital down on the populist candidate, pulling off a victory.
This raises an important question, and we can look back at the Saffron Sweep in the Indian state elections of West Bengal last week to really understand this dynamic. Traditional polling relies heavily on voters answering a phone and openly declaring their intentions to a total stranger.
Which introduces massive social desirability bias. I mean, people often tell pollsters what they think is socially acceptable rather than what they actually intend to do in the privacy of the voting booth.
Exactly. But a prediction market bypasses that social pressure entirely. It asks a completely different question. Regardless of your personal politics or who you want to win, who do you mathematically calculate will win, and are you willing to risk your own capital on that calculation?
Money doesn't lie to a pollster. Money seeks a return.
Right? It forces absolute objectivity. What we are seeing in Colombia is the market aggressively pricing in a populist victory, flying in the face of tighter traditional polls. It strongly suggests that financial markets, operating on the cold calculus of profit and loss, are evolving into a superior tool for capturing hidden voter sentiment.
We have covered incredible ground today. Let's synthesize what the May 12, 2026 data is actually telling us. We started with Under Armour's micro turnaround attempt, where asymmetric local knowledge is predicting a massive earnings beat against Wall Street consensus.
Right.
We looked at the sheer gravitational pull of a $1.75 trillion SpaceX IPO valuation. We examined Capitol Hill voting today to ban lawmakers from trading, highlighting the friction of this institutional era.
Yeah, the immune system of massive volume.
Exactly. We saw Bitcoin's massive $23 million volume acting as an ocean to drown out insider manipulation. And finally, we tracked how specialized traders are pricing the nuance of the OpenAI courtroom and bypassing the social bias of Colombian polling booths.
Every single piece of this data points to a singular evolution, really. Prediction markets are fundamentally reshaping the infrastructure of information. We are moving away from top-down analysis and toward decentralized, financially incentivized truth-seeking.
It begs a massive question about the future of how we consume information.
It really does. If prediction markets consistently prove to be more accurate, early indicators than traditional polls, pundits, and expert analysis, it raises a fascinating scenario. Will we eventually see a world where the public simply stops consuming traditional news media entirely?
Wait, entirely?
I mean, why read a speculative 1,000-word opinion piece about an upcoming election or a complex corporate merger when you can just check the daily odds to understand the objective truth of what the collective hive mind believes? We are rapidly approaching a transition point where society might move away from reading the news and move entirely toward reading the liquidity.
Reading the liquidity. Wow. I love that framework. We don't need to ask the experts what they think will happen. We just need to look at where the crowd is placing their capital. It is a fascinating shift in how we understand the world, and we are so glad you joined us to explore it today. Keep questioning the consensus, keep looking at where the liquidity is flowing, and if you are listening to this early enough, keep an eye on that 8:30 a.m. Under Armour earnings call to see if the crowd was actually right about the water currents beneath that cargo ship. Thank you for joining us on today's deep dive. We will catch you next time.